welcome back, traders and investors. We have Harlan Pyan, like lion, right, Harlan? From All About.
Harlan, Ryan, Pyan, Lion.
We don't
Doesn't
want you
matter. Any
lying
way you
on the
want to do it.
show. You're going to get us in trouble. But from
No, I was thinking more of the animal lion. So, the charts don't lie, though.
Hey, price
So,
don't lie. And Harlan's here, All About Trends, as a subscription-based newsletter service focusing on individuals helping secure consistent profits in the market by trading what they see, not what they think, hear, or fear. Now, Harlan, I gotta give you some credit here. The S&Ps, when I had you on here last week, we were just kind of wallowing in the 18-20 area, and of course, I was looking for the big break here. And your hypothesis is that we were just kind of really gonna float out. You didn't see anything on the horizon. We were just kind of gonna float up and test those highs. Now, that has been the scenario, but boy, what does it tell you when you have all those tops there in the S&Ps in the mid 1840s, and then you struggle at that level 2 days in a row? Are people stepping down with their offers?
well, it is resistance, and everybody knows it. And that's the issue. For right now, you have to honor resistance. You're up in that zone. You can see that, 2 days doesn't really make a trend. It's a continuation of the, push off the 1740 support level. And, you're up into an area of overhead supply going back, I don't know, most of January. So, that's overhead supply. Anybody who bought in that zone had to ride it down from, 1840 to 1740. What are they thinking about now? Ooh, I don't want to go through that again. So now they're all break even. And they're like, well, I don't want to sit through that, have to deal with that again. I'm just going to walk away and wash on the trade. So you have to work through that overhead supply. Not to mention, you came from 1740 to 1840. That's 100 points in what, like a week? At some point, you got to digest, you got to consolidate those gains. It's kind of like Thanksgiving Day. Right after you get done eating, the last thing you're going to do, because you're full, is get out and run around the block. You got to let that digest. And, 1740 to 1840 is a huge move in a short period of time. I mean, look at the NASDAQ. What are we, 39.60 to 42.72? That's huge. That's like a year's worth of returns in, what, a little over a week?
I thought you were
So,
gonna
for
say
it to take its breath.
I thought you were gonna say after Thanksgiving dinner you have dessert.
Well, yeah, that too. And then you head for the couch. So more often than not. But I think you get the analogy.
Yes, I do.
And so we're here. So, it's an inflection point. We are overbought. If you can look at full stochastics, you can see you're up in the overbought territory. The relative strength is, starting to push that, that 70 level, where things tend to get a bit overbought. So it's just a matter of, where to from here. You got to look at resistance and honor resistance for right now. We could chew around. Every time you get up into these, after you make a run, you could chew around for 4 or 5 days, and then we're going to find out what this thing is made of. So I don't know. I'm just playing it really close to the vest. I do see a lot of names that, even though the market has, came back up, here we are. We're ready to push into new all-time highs again. What's going on underneath the surface? I did find a really interesting chart last night, and it's the S&P 1500 new highs, new lows percent index. And while the indexes are basically hitting new highs or there, it seems to be that only 10% of the market is hitting new highs. So you got a divergence off of the October. I think it's SUP HLP. At least that's what it was on stock charts. What do you got there?
I don't. What did you say it was on yours? SH.
I don't think we're going to have that.
SUP HLP.
Yeah, I don't think we get that.
Okay.
Well, which stocks? So, okay, obviously we've had this big, we're at where we're digesting here now. We've got resistance very well defined. Support still kind of sketchy when I'm kind of looking at it here. But
Right.
and we've had some stocks, obviously financials kind of weaker here. What stocks like are you watching here? Because you know, obviously there's still going to be stocks moving higher here. You had Tesla breaking out to new highs yesterday. You had Netflix making new highs. Facebook failed to make a new high. But which stocks or sectors are you looking, you know, to continue this run here, or are you just hands off right now and you're thinking the overall market here might just fall?
Well, on the long side of the market, I'm not really seeing a lot. Stocks have had some huge runs. I mean, look at Tesla. I mean, when I say huge runs in a short period of time, that's exactly what I'm talking about. And when you see a stock like Tesla, heck, 140 to 203.70 in about a
Month
month.
and a half, yeah.
Yeah, exactly. That's a huge run. How much more do you want? Yeah, I do see it breaking into a new high. That's good, but you're a little late to the party. The ultimate time would have been, I'd say at the beginning of February when they hit that 185, pulled back a little bit for about 4 or 5 days. That's what we look for. We want to see stocks pull back off their highs, and resume a trend. I just don't like chasing a stock with a market at resistance that just ran as far as it has in a short period of time. It's like chasing a bus. If you're chasing a bus from behind the bus, you don't know when that bus is going to stop, and then when it does, you're probably going to go splat.
Okay. What about? I mean, like Dennis mentioned, we have well-defined resistance here at that 1840 level. Don't know if we're going to get a shot at it today, but traders always like to have a two-tiered approach. What do you have a trigger on the downside in the S&Ps or in the Dow or something that you would say, okay, I know you kind of like to wait and see and stuff here. To me, it's this whole 1835 level because this is where we got up to in mid-January where we stalled at. Is there a trigger that you have on the downside that would cue you to say, hey, we're going back to 1800, perhaps going back to test those lows at 1730?
Yeah. Well, in the short term here, I would say, you can come back and test if we're going higher and if we're going to continue. The what to watch for is probably, a pullback to the 50-day. If we pull back 3-4 days and you just can't, if they can't kill them, they're going to run them. The flip side is if they can't run them, they're going to kill them. So, in the short term here, watch the 50-day moving average. I think it's at 1812, somewhere around there.
You're talking about the
So,
cash, though, right?
Yeah, I'm just looking at the cash right in here.
Okay.
So, so I'd watch for that. Resistance is resistance right now. If we're going to go higher, let it pull back and, kind of let them come to you. Just because the market's at new highs doesn't mean you have to trade along with it. When we were down at that 1740, the face of fear, nobody wanted to buy anything. Everybody thought, chicken little, the sky is falling. I saw so many stocks out there that were sitting at support levels that were just outright screaming buys when nobody wanted it. Now, everybody wants the market and everybody's all gaga, and I'm not seeing nothing. I'm not seeing nothing on the long side with low-risk entry points. See, that's the key. It's okay to sit there and chase stuff, but, the method to our madness is we like to buy pullbacks. And if we're not seeing a lot of names setting up on the long side with low-risk entry points, that tells us something.
Okay.
Go
ahead, Dennis.
Let's take the flip side of this then, because obviously we have resistance well defined the whole 1840s, and we're not seeing a lot of stocks, that we'd like to look from the long side. Do you see anything you'd like to short here? Do you see anything coming up to major resistance here and is due for possible pullback?
Well, that's a good point. Let's take a look at some of those names. I'll tell you what I am seeing a lot of. We work off of the daily charts with a 50-day moving average. Let's say a 6-month time frame and frequency. So if you can kind of get into that type of chart pattern on your screen, that would help immensely.
Okay.
A couple of names here. All right. Take a look at Baidu. Take a look at Baidu once.
Yep.
And, you can clearly see with Baidu, it was in a nice, clearly defined uptrend. Then the market fell apart.
Get my
No,
chart.
you're on Apple now. Am I behind? No,
Yeah,
you're on Apple.
You'll be about 20 seconds delayed actually, just with this is catching up. So
All right. All
it'll
right,
be
here
to
we go.
Baidu in a second.
Got it. All right. When you look at Baidu, you can see the stock in a 6 month time frequency with the 50-day. It was in a nice, clearly defined uptrend channel from September through first of the year. Then it came down, got slammed in the recent sell-off, and all it's done is snap back right up to the 50-day moving average, which when an issue tends to break below it, the 50-day tends to act as resistance. When it's above it, obviously, and it pulls back to it, it tends to act as support. So that's an issue that may have some issues. BEAV, same thing. Broke support at the 82 level, came down, hit the 74, and all it's been able to do is a snapback rally right up to the 50-day moving average.
What's the average on that? Or what's the symbol?
BEAV.
BE Aerospace you're talking about.
Oh,
Yep.
okay. Haven't seen that symbol in a while.
Yeah.
Okay, so 50 days your trigger then, huh? So if you have a stock break below the 50-day and an uptrend and then it comes back to that level, that's your bogey. So you see, in order for it to continue moving higher here, you expect it to get back over the 50. Just looking at this one too, it looks like, yeah, I don't know if you're much of a Fibonacci or retracement trader, but this one looks like it's almost right on the nose of 50% retracement. You had a high at 89 bucks, just under 89. You had a breakdown to 75.14, 7-point move takes you back at 82. So that's a good area. We'll see if I like this one. I might have to keep an eye on this one, especially if you
So,
got.
there's two ways to look at this thing. I mean, if you're looking to go short the stock, well, first off, if you're long and you want to get out, you're coming up into some overhead supply up at that 82 zone, for one thing. You got the 50-day, you're rallying up to the 50-day for another thing. Those are all things that if you're long and you're looking to walk away on a bounce, you might want to start to think about that. The other side of the coin is, if you draw a line and line up all your lows off of that 74 low. If you break that to the downside, well, then, you broke that short-term uptrend, off of the 74 lows. That's actually, one could say that's an actual long or short side trade trigger. For us it is. We're short that name as of yesterday.
Okay, good.
So we
Okay.
like to,
One last one here, and it blew away earnings here. Garmin, I just can't believe they're still making money with people being able to. I mean, you can do it on your phone. I mean, and when I'm in the car with Lisa, I mean, she's got her phone, she got all these apps and everything. I don't know what you need a Garmin for, but I guess they must make anything, other things. But 53.80, we just popped up to here in the pre-market. Any thoughts on this issue?
oh gosh, I mean, 53.80 in the pre-market, and here it closed at 47. I mean, percentage-wise, I mean, if you owned it, you got yourself a nice pop today. Why push it? If you don't own it, you're definitely paying up for the stock. I'm not one to like to chase things. If I see a stock go from 47 to 53 overnight, and it's going to open up, 6 points up, I'm not going to be buying that.
Right.
More often than not, you see a lot of stocks after they report earnings. Obviously, you're paying a premium for the certainty. I'm not going to chase them. I'll let them settle down, let the heat, let it all cool down, let the dust settle, and then I'll take a look at it. And it could be 3-4 days later. I'm just not one to chase stocks. More often than not, like I said, when you chase a bus, that bus stops, you're going to go splat right into the back of the bus. There's always something out there brewing. Why chase things?
Correct. Okay, one last question here from Violin Maker, and you were mentioning the 50-day average on stocks. Do you use that on all of them, or do you maybe go a little bit shorter term to the 10 or 20-day moving average for stocks, or is the 50 your staple and you stick to it?
Well, I always use the 50, but you bring up a really good question. Do you move to the 10, move to the 20? That all depends who you are and who you choose to be. Are you a trader? Are you an investor? What time frame and frequency are you working in? What works for you? What is the stock actually trading off of? Stocks are like people. There's all different types, and a lot of stocks will trade off of, all different types of moving averages. There's the EMA moving averages. There's the simple moving averages. I can remember when, I think it was Tesla, when it was down in the gutter, it wasn't near the 200-day simple, but it was near the 200-day exponential. So there was an issue that was trading off of a different moving average. Again, though, it all really goes back to who you are as an individual. If you're a really short-term trader, you have no need for the 50-day. You're looking for stuff that's
Right. That's
trading
not
above the
right.
10-day.
Right. Okay. All right, Harlan. Well, thanks for coming on and giving us your outlook here and some things to look at in the market. We'll keep an eye on this BE Aerospace and the Baidu. We finally got you to talk about shorting a couple stocks here, a potential setup. So, thanks a lot for coming on. Have a good trading day. We'd surely like to talk to you again next week.
You bet. I'll be back next week.
Okay. Have a good day.
Take care,
Thanks.
guys. See you later. Thanks. Bye.